Biden administration wants crypto exchanges to separate customer and corporate funds. All right, so this one's interesting. Federal officials saw Coinbase's admission about customers' vulnerability in a bankruptcy and will call for a congressional action to segregate clients' funds, sources say. U.S. President Joe Biden's administration will press Congress to demand cryptocurrency exchanges keep their customers' money separate from their own corporate funds, according to a person familiar with the plan that could constrain the way the industry does business. This is kind of interesting because if you do recall, when Coinbase was when we were kind of going into this crazy bear market, and then we had that, I guess the largest dip so far, down to $25,000. Coinbase released a statement that essentially said something along the lines, and I'll need to pull it up here in a little bit, but along the lines of the funds that are in Coinbase, in the event that Coinbase went bankrupt or that entity went bankrupt, would not be the user's funds. They would be Coinbase's funds, and that would be used to resolve the debts during the bankruptcy, essentially, which was a very odd move and seemed a little funky. So maybe that's where this is coming from. Spurred by Coinbase's recent disclosure, which was this one. No risk of bankruptcy, but, the disclosure language is the SEC requirement, and that's what the CEO said, but it was kind of interesting. Anyways, I don't know if we can find the actual statement. Yeah, because custodially held crypto assets may be considered to be the property of the bankruptcy estate. In the event of a bankruptcy, the crypto asset we hold in custody on behalf of our customers could be subject to bankruptcy proceedings, and such customers could be treated as our general unsecured creditors. All right, so spurred on by that, it would be jammed up if the company declared bankruptcy. Federal officials intend to push U.S. lawmakers to fix the problem by insisting that a future legal framework require crypto firms to keep customer assets walled off. That type of custodial rule is standard for financial firms such as futures platforms, but crypto exchanges routinely mingle their funds with customers' holdings in the same pot, a situation the administration wants to see ended by legislation. The securities industry commonly commingles funds, but the investments are also more heavily regulated. Federal officials will push in the coming weeks to put the change into any crypto bill considered by Congress, the person said. Building on a contention last year in the president's working group on financial markets report on stablecoins, companies that host crypto wallets need close federal oversight. There should be a clear distinction between, of course, self-custodial wallets and then centralized exchanges. So this is where things get interesting, right? And I don't know how this is all going to work out. I don't even know if this administration or anybody that's currently within the federal government in the U.S. even understands. If I went and said to them, look, I get it. Yes, go ahead and regulate the centralized exchanges. I understand that. Look, you're already working with them. They're moving funds between, the fiat currency system, the US dollar, and crypto. I think that I actually am fine with that because I'm also not a huge fan of the centralized exchanges by and large. And like we've talked about before, for the most part, they are participating within both ecosystems. But there seems to be a confusion for a lot of people when it comes to self-custody, right? Like generating your own wallets and self-custodying your crypto. You're not going to be able to go to Ledger or Trezor or MetaMask and be like, hey, look, we're going to regulate you guys. They're only tools, right? It'd be like trying to regulate the Ridge wallet, right? That's essentially what it would be. There's a difference between regulating a card and then regulating this Ridge wallet, right? It doesn't, it's a tool. So I'm wondering if they really even understand these differences when they're talking about this, because that's, I don't know. That line kind of worries me. The administration thinks the trading platform should still permit pooling of customers' assets, allowing the companies to keep managing trades internally rather than having to put each move on a blockchain. The administration thinks the trading platform should still permit pooling of customers' assets, allowing the company to keep managing trades internally rather than having to put each move on the blockchain. I would rather it go the opposite direction. Personally, I would rather that they are forced to put every single change on the blockchain for full transparency. That's me, though. Coinbase, a publicly traded company that is one of the industry's largest exchanges, admitted in a filing to the Securities and Exchange Commission last week that, quote, in the event of a bankruptcy, the crypto assets we hold in custody on behalf of our customers could be subject to bank proceedings, and such customers could be treated as our generational unsecured creditors, end quote. That's the bottom rung of people paid back when a company fails, suggesting a misstep by Coinbase could indefinitely lock up clients' tokens or funnel them away to pay other creditors. Quote, don't think you actually own your tokens when you go into a digital wallet, end quote. Securities and Exchange Commission Chair Gary Gensler said at the conference last week. Oh my God, this terminology needs to get fixed a lot. Yes, your phone, your funds, your crypto, not your keys, not your crypto. There are digital wallets where you control your keys, okay? They need to start understanding crypto before they start making rules about crypto. This is just ridiculous. Like, it's like painful to like read it. He's correct, but he's incorrect. Like, it's frustrating because like these distinctions are incredibly important when we start talking about people that are regulating the industry. These are, every single piece needs to be articulate and clear. And when they start writing, of course, all of these policies, if they're not articulate and clear between the difference of controlling your keys to a digital wallet and a centralized exchange, then it's just going to be a freaking mess, bro. Underlining some of the federal government's concerns about custody of investors' assets. Quote, if the platform goes down, guess what? You just have a counterparty relationship with the platform. Get in line in the bankruptcy courts, end quote. When a firm takes a customer's tokens, they can use them as they will, Gensler pointed out. In fact, the exchanges are, quote, often trading against you, end quote, he said. And since customers lost billions in the wreckage of Luna's algorithmic stablecoin, we talked about this. We knew that we knew that was going to be utilized to regulate further. I mean, that was like hands down, like that was going to happen. The question is, how much of an advantage are they going to take from that? And then is there that tinfoil hat of, was this the whole BlackRock thing? I know that they said that they didn't have any part to do with it, but as far as like looking at the purchases in the blockchain, anyways, it looked suspicious. It's just like, it's getting to the point of like, the plays are so clearly obvious. It's just hilarious. And they're going to use it for his investor protection advocacy, right? And to gain momentum for it. Obviously, never let a good, never let a good tragedy go to waste, or whatever that line is. Quote, congressional Democrats will follow his lead and escalate their calls for greater oversight, end quote, predicted Jarrett Seinberg, a Washington-based analyst at Cohen Group Incorporated, in a research note this week. The troubles with Terra USD and the drop in crypto valuations will make it politically more challenging for Republicans to effectively oppose Gensler's policy agenda. There you go. For its part, Coinbase staggered by a loss of more than 80% in its share price since last year, assured its nervous customers and investors that the distressing splash of its SEC filing wasn't meant to signal anything about its prospects. Founder and CEO Brian Armstrong said that the disclosures were merely responding to a new SEC requirement, and his company isn't in danger of filing for bankruptcy protection. For now, crypto's leading platforms, also including names such as Binance.us, FTX, and Kraken, don't need to strain themselves to meet the administration's push for a custody rule. A closely divided and essentially immobile Congress isn't likely to produce legislation this year, especially as lawmakers gear up for the bloody arena of the midterm elections in November. The most optimistic guesses see a crypto bill getting traction when the dust settles on the new Congress next year. But not everybody sees fencing off customers' money as the best answer. Quote, instead of focusing on the lack of client asset segregation at digital asset exchanges, which is also true with the securities held in street name at DTCC, legislators should work on a digital asset investor program or protection act that mirrors the Securities Investor Protection Act, end quote, said David Weisberger, co-founder and CEO of CoinRoots Incorporated. It could give investors primary status in bankruptcy proceedings, and it could also set up a backstop fund to cover losses like the one securities investors have. And I think that makes a lot of sense to me as well. For others, a law banning firms from blending customers' assets with their own would still represent a bare minimum for those calling for rigorous investor safeguards. Quote, there's a lot more that has to be done, end quote, said Patrick McCarty, a financial consultant and former regulator who teaches crypto classes at Georgetown Law. He said segregated accounts would be a significant step forward, but argued strict regulations and deeper overhaul of business model are needed to return to crypto's founding ideas about recording every transaction and on, obviously, a public ledger. Why would one advocate for a Band-Aid, albeit significant, when it looks like major surgery is needed to protect investors, McCarty said. And really, this does come back down to talking about the fundamentals of cryptocurrency, encouraging people to self-custody and encouraging people to get their cryptocurrency off of large exchanges. And that needs to, by and large, be done by the individual. You can't just, rely on daddy government to protect your investments when you make a bad decision. You need to take responsibility, own up for it. And also you need to learn to protect your own assets, right? Protect your own assets. All right. Self-custody, get it off of exchanges. Learn how to do that. As far as regulations, there's no way they're going to be able to regulate paper wallets or anything like that. Learn how to use those and get familiar with it, right? That's the goal. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.